Stocks have been flirting with correction territory in recent months, and though the tech-heavy Nasdaq Composite dipped into a bear market last week, historical data shows that investors should look past market volatility, with experts urging investors to buy the dip on the market's recent sell-off. Even if you have to eat some further losses, buying stocks after they have already fallen 20% has led to nice returns historically. During the Nasdaq's last two bear markets starting in 2018 and 2020, respectively, stocks rose 37% and 73% the following year, while the index is also up 235% since T. There could be an upside surprise ahead for you. Economic growth, even as the Federal Reserve begins aggressively raising rates to combat surging inflation and the Russia-Ukraine conflict continues to weigh on markets, predicts Moody's chief economist Mark Zandi. Despite all the economy has had to deal with, odds are that the current economic recovery will evolve into a self-sustaining expansion, which means that the economy will return to full employment, he predicts. All of this still critically depends on whether the Federal Reserve is able to quickly normalize rising interest rates without undermining the economic recovery. However, policymakers now need to work quickly, though not too quickly, Zandi says. No wonder recession and stagflation risks are so uncomfortably high. As long as Russia continues to pursue its invasion of Ukraine, recession and stagflation will be serious threats, Zandi says. If the European Union follows the United States in banning Russian oil imports, for instance, oil prices would spike even higher, to around $150 per barrel, and U.S. gas prices would approach $6 per gallon, Zandi warns. Stocks jump as investors prepare for bigger rate hikes to fight inflation. Forbes Dow gains nearly 300 points as stocks wrap up the best week since November 2020. Forbes analysts reveal their top stock picks to beat stagflation and outperform choppy markets. Forbes Federal Reserve's long-awaited rate hike.